Hey everyone, welcome back to Corporate Decoder. Today, DNA X Incorporated ticker is SONM just filed an amendment to a previous current report, and I am seeing a crucial update on their financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting a significant boost in their equity, and this might be the key to staying listed on Nasdaq. So this filing is an amendment to a report they filed back on the 2nd of July. Think of it as a correction or an addition to their previous statement. They are updating information about some stock sales, changes to their security holders' rights, and amendments to their official company documents. The main story here revolves around DNA X Incorporated and their efforts to meet Nasdaq's listing requirements. Specifically, they need to show they have enough stockholders' equity, which is basically the value of the company left over after you subtract liabilities. Nasdaq has a minimum requirement for this to keep a company trading on their exchange. Now let's talk about what happened. On the 8th of July, the company sold a bunch of what they call Series B preferred stock. They received $2.5 million in cash and also got rid of $3.1 million that was owed on a convertible note. This is important because it means they are raising money and reducing debt. They also have more shares they plan to sell by mid-August. As part of these changes, they also filed something called a Certificate of Designation with the state of Delaware on the 6th of July. This is like officially changing the rules or descriptions for different classes of their stock. This is where it gets really interesting for investors. Based on these recent financial moves, DNA X believes they now have more than $2.5 million in stockholders' equity. This is the magic number for staying on the Nasdaq capital market. They are waiting for Nasdaq to officially confirm they meet this requirement. To show how they got there, they provided a summary of their estimated stockholders' equity. Let's look at this table. We see their net income or loss over different periods. In the first quarter of 2026, they had a significant net loss of $6.34 million. By the second quarter, that loss narrowed to an estimated $1.53 million. And their latest estimate for the 9th of July shows a much smaller loss of $147,000. This trend of reducing losses is a positive sign. Their beginning equity was in the negative, showing they had more liabilities than assets at the start of these periods. However, look at the adjustments. They had $2.446 million from financing, $3.049 million from converting their notes, and other adjustments. These are the key drivers that are moving their equity from negative territory into positive. And the big number is their estimated ending stockholders' equity on the 9th of July. It stands at a positive $3.798 million. This is above that crucial $2.5 million Nasdaq threshold. This is a critical turnaround. Now, they include a standard warning about forward-looking statements. This just means that their predictions about the future are based on current expectations and could change. They are basically saying that while they expect good things, things could also go wrong, and they are not making any absolute promises. This is important because it reminds us that past performance and current estimates are not guarantees of future results. Overall, this filing is a big deal for DNA X Incorporated. They appear to have successfully navigated a situation where they might have been close to being delisted from Nasdaq. By raising capital and converting debt, they've boosted their equity significantly. This is very similar to how companies facing delisting try to shore up their finances. For example, Bed Bath & Beyond in its final years made several attempts to raise capital to meet listing requirements, but ultimately those efforts were not enough. DNA X's proactive steps here, especially converting debt into equity, are a strong positive signal, but the key will be maintaining this level of equity and demonstrating consistent profitability moving forward. The risk I am watching is whether this equity boost is sustainable, and if they can avoid further significant losses that could put them back in jeopardy. What I am actually looking for is Nasdaq's official confirmation and their subsequent financial reports to see if this trend continues. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video and subscribe for more. Join our Discord community linked below.